Hey guys, it's James and I'm back with another ETF video, and today I wanted to compare SCHD versus 3 other similar ETFs. And in this graph here we are looking at a 6-month return, with SCHD being the black line and the 3 other ETFs that I'll reveal in this video being the purple, orange, and blue. This is the 6-month return. This is the 1-year return, with SCHD being the lowest, the 2-year return with SCHD being the lowest again, the 3-year and the 5-year. So you can see that these 3 ETFs track very similarly with SCHD, and a few of them actually outperform SCHD by a wide margin. So by the end of the video, we'll reveal all 3 of the SCHD competitors, and then come back to this graph and see which one is the largest one. And we're also going to come over to my compound interest analysis calculator, and the ETF that outshines all the other 3, including SCHD. We're going to compare it with SCHD, put in its dividend yield, put in its expense ratio, and see with the consistent annual growth rate for both SCHD and this mystery ETF. Take a monthly annual addition with an initial deposit, reinvest the dividends, and see what our portfolio would look like with consistent growth after 10 years, and what type of income we could expect with our inputs. So let's get started. So SCHD is a very popular dividend equity ETF. Its current yield is 3.72% with the expense ratio of 0.06. And just a very quick highlight for SCHD. What we're looking at here is SCHD. It tracks an index focused on the quality and sustainability of dividends. So SCHD is based on the quality and sustainability of the dividend stocks it invests in. Just a few of the dividend stocks that it does invest in. These are the top 10 holdings: Amgen, AbbVie, Broadcom, Merck & Co., Chevron Corporation, and the 5 remaining top 10 holdings, with the top holdings being around 40% of the total weight. The next ETF we are looking at, which might not be as common, I haven't seen much of this ETF on YouTube, CAWZ, or COWS. It is Pacer US's Cash Cows 100 ETF. It has a yield of 2.08% and an expense ratio slightly high at 0.49%, but it has done fairly well the past year here, with a 10.9% return, and year to date an 8% return. The strategy behind COWS is they like to invest in companies that have a high free cash flow yield, or companies that have the ability to generate this yield, which indicate a company is producing more cash than it needs to run the business and can invest in growth opportunities, or they invest it or give shareholders value back in a dividend. The next ETF we're going to look at is DGRW, and just taking a look at the holdings of COWZ. The top 10 holdings are McKesson, CVS, Schneider Energy, Diamondback Energy, and Marathon Petroleum, with the 5 remainder being these 5, with a total weighted percent of 21% in the top 10 holdings. So definitely spread out a little bit more than SCHD is, where SCHD top 10 holdings was about 40% of the fund. And coming to the third ETF on this list, we are looking at DGRW, Wisdom Tree's Quality Dividend Growth Fund ETF, sitting at a 1.91% yield and a 0.28% expense ratio. And over on DGRW's webpage, their Quality Dividend Growth Fund ETF, they say, why would you invest in DGRW? It gains access to the current investment landscape of the U.S. large cap dividend growing companies by applying quality and growth screens. They are saying you can use DGRW as a complement to high yielding dividend strategies, or as a replacement for large cap quality strategies. So very similar to SCHD. So what is inside of DGRW? Well, it has a total of almost 300 holdings, with the top 10 holdings being very similar to some of the S&P 500 and NASDAQ holdings: Microsoft, Apple, Broadcom, J&J, Procter & Gamble, and the 5 remaining of the top 10, with close to 40%, similar to SCHD, being in these 10 holdings. And last but not least, you have VYM, Vanguard's High Dividend Yield Index Fund ETF, with a dividend yield of 3.27% and an expense ratio of 0.06%. Coming over to VYM's webpage, this is an ETF owned by Vanguard. Coming down to their summary, Just a quick note on their summary. They provide a convenient way to track the performance of stocks that are forecasted to have above average dividend yields. So the 4 ETFs on this list, if we go back to the 6-month return, SCHD being the black in negative 4.43%, the purple being VYM at negative 4.5%, the blue being 2.86% return over the past 6 months in COWS, and then DGRW at 1.99%. Now, looking at the 1 year, it looks like COWS and DGRW have outperformed the other two. The 2 year, COWS and DGRW continue to outperform. The 3 year, COWS is up almost 70% over the course of the past 3 years. And then the 5 year, it looks like COWS and DGRW have outperformed in the past 10 years SCHD and VYM. And coming over to my calculator, I wanted to compare SCHD directly to COWS, COWZ, which was Pacer's US Cash COWS 100 Index ETF. This was the ETF that pretty much outperformed the other 3 ETFs on a very consistent basis over the past 5 years. I wanted to compare it directly to SCHD. So if we went back over to Seeking Alpha and checked their dividend yield of 2.08% and an expense ratio of 0.49%. So let's put that in the calculator. Dividend yield of 2.08%. So let's go ahead and put its percent in there, and then 0.49% expense ratio. And we're going to see how that compares to SCHD, if that expense ratio does pull the fund down or not. So now the trick comes to what type of annual growth rate do we project for SCHD and COWZ. And this is my compound and interest analysis calculator. And in the green here, we have the price performance for 1, 2, 3, 5, and 10. But for some reason, the price performance is not being pulled over by Google. So we're going to go over to both of these websites and go to their performance. Most ETFs are going to have a performance tab. You scroll down here on the performance tab for SCHD, and we are looking for annualized returns or cumulative annual growth rates. And we're going to be looking at just the market price because we already put the dividend yield in there. So we're counting for the dividend yield. So we just want to look at the market price. And since inception, which was October 20th, 2011, it has averaged 12.5% per year. So we are going to put in 12.53 for SCHD. Now let's go over to COWZ's website, coming down to their performance tab for their ETF page, coming over to since inception, which was December 16th, 2016, their market price return is 12.74%. So at 12.74% compared to 12.5%, with SCHD slightly edging out COWZ with that 3.7% yield and that 0.06% expense ratio. We can see that coming over to our graph here with a $250 monthly investment with dividends reinvested, SCHD does slightly outperform COWZ. At the end of 10 years, you could be projected to having around $70,000, $250 a month addition, and with COWZ, $63,000 after 10 years with a $250 a month addition. This is the type of income you could expect to receive on an annual basis with these two ETFs having this much in these ETFs. Now, if we didn't reinvest the dividends, and let's see if COWZ does outpace SCHD, and it does not. It looks like that large expense ratio of 0.5% or close to 0.5% does knock down COWZ slightly, where SCHD would outperform even with not reinvesting that dividend yield. So let me know what you thought of this video. If you are still going to be investing in SCHD with that strong dividend yield and strong annual price performance, head down to the comments. Let me know if there's something else you'd want to see analyzed in this way. And with that, thanks for watching.